Perfect. Perfect. All right, so this is going to be a quick live. I'm going to wait until like a few people jump on before really breaking things down for you guys, because this right here is definitely something that y'all want to pay attention to. So I was actually going to title this, what happened with these bank failures explained to like a 10-year-old, or like pretty much the same shit. But my wife said like I shouldn't do that. But I'm going to wait for like a few people to come on. But yeah, this is very important, a very big deal. And a lot of people really don't know what's going on. Ready for this live, save it because we're boarding our flight. I appreciate that. Safe travels too. But I'm definitely gonna save it too, and I appreciate that. But yeah, it's a lot. There's a lot going on, and y'all need to know, because this definitely will affect your wallet. It's gonna affect how banking is gonna be, well, pretty much moved. Because again, I already think that we're having a bank failure. They're just trying to like delay the inevitable. Pretty much, that's really what they're doing, and it's like they keep doing that over and over. They just like we need to suffer to really get out of this, and they're like, no, we're not gonna suffer. So they just keep like prolonging it, and if you keep prolonging it, it just makes the shit worse. But anywho, so like it's gonna be a quick explanation. Probably be on here for like maybe 20 minutes, probably less than that. I'll probably do some Q&As if you guys want that. But damn, these fucking AirPods, man. Like, so I just got these new AirPods. They flip your money 10x before you take it out. Yeah, I'm about to like literally. I'm gonna explain this so simple for you guys. Like, yeah, I'm gonna explain it. Y'all gonna be like, yo, that makes so much sense. And another thing too, like again, as I said, I'm gonna do a Q&A if needed, as well as you guys want to a breakdown of the markets and so forth. So, all right, pretty much, I can start it now. So pretty much, if you guys are not aware, so a lot of people are saying that we had 2 bank failures these past few days, but that's not necessarily true. We actually had 3 bank failures this past week. So we had Silvergate, they collapsed on last Monday, and Silvergate, that's like pretty much the smallest of the bank. I believe they had around like $11 billion worth of assets, so it's really not much. And then obviously you had SVB, which is Silicon Valley Bank. That right there is one of the largest of the 3 banks, and that's the one that we pretty much know they collapsed on Friday. And then you also had collapsed yesterday. We had what is it called? I wrote it down. What is it called? Did I write it down? I didn't write it down. Shit, what is it called? Oh my gosh. That's pretty embarrassing. Silvergate National Bank, that's what it was. Oh my gosh, that would have been embarrassing. So those are the 3 banks that actually collapsed these past week. But again, people are only talking about the 2 banks that we know about from yesterday as well as on Friday. So I'm going to break down why it happened. I'm going to break down their response to what happened, and also like how both the Fed and Biden are trying to pretty much make it which like, everything is cool, but it's not. So if you guys know that meme in which like the guy or some type of creature, he's like in a room, fires all around him, and he's like, everything is fine while like the place is burning. That's exactly what's going on right now. Like, we are literally on a brink of a financial collapse. And it's cool because like, as a trader, I can trade through it, right? I can buy and sell, so I'm not really affected. But also as like a regular civilian, someone who's not a trader, it really sucks, because a lot of jobs are going to be replaced. A lot of jobs are going to be lost. And it sucks that it's going to be that way, but this is really the process that we're going about doing it. So anywho, so let me go back to exactly what happened. So they have this thing called a bank run, and pretty much all 3 banks, that's what happened to them. So a bank run, what that pretty much means is like, let's say if you have a huge amount of depositors, they go to the bank and they go to withdraw their money all at once, right? So let's say you have like lines up of people trying to go for a withdrawal of their money. That's a bank run, right? So like, with these banks, they didn't actually have the capital necessary to give everyone all of their money. And that's really what happened. They started to collapse. So what makes it even worse is that you have, what's up, Matt? What makes it even worse is that you have the announcements of these 3 banks days before saying that they don't have the capital to pay their depositors. Depositors are those who put money into the bank. They don't have the money to pay the depositors, and they're actually looking to raise money. So again, if you're someone who has money within these banks and you hear that your bank doesn't have enough capital, the first thing you're gonna do is run to the bank and try to take your money out. Now, if you run to the bank and try to take your money out and they're saying, hey, like we're not allowing you to take any money, that's what's going on. And again, we just had the bank failure from that. So speaking about that, and that part was important, I'll circle back to that in a second. But I'm gonna also explain why the banks didn't have any money. So if you are not aware, banks don't actually hold your money. And people found this out the hard way, right? So like in 2028, in 2008, where we had the financial collapse, a lot of people realized that banks are only allowed, these things like fall out of my ear, but they realized that banks only hold 10% of your money. So if you do it in layman's terms, like, or just break it down, for every $100 that you have, $10 really is set for yours at any given time. And that's the reason why when people kept going to the bank, they're trying to take their money out. They're saying, no, you can't do any more withdrawals for the day. You have to come back tomorrow and so forth. So that's what happens. And that's also the reason why that if you're looking to make a large withdrawal from your bank, you have to contact them in advance. You have to say, listen, like, I'm calling in, I need to withdraw like 20,000, right? So they'll say, okay, you can come in by, what's today, Monday? You can come in tomorrow morning, or you can come in by Wednesday and you can get the money, right? Smaller withdrawals like 10,000 or less, they pretty much have that available. But so yeah, that part is important. Now, the reason I'm also saying that is because during COVID, people don't know this as well, but during COVID, banks actually dropped it from 10% to 0%. So at any given time, they literally don't have to hold any of your money. You have to contact them and let them know how much do you need. But again, they said that like low key and not anybody would know. Because think about that. Like if you found out that at any given time, the bank's not really allowed to hold any of your money, you're going to be like, yo, I need to take all the money out ASAP. So like, oh yeah, that part is important for me to explain. Now, when it comes to, oh my gosh, these AirPods, they just keep falling. You know what's funny? I actually like the old AirPods better. Like these here, I think I might go back to them. But anywho, that's not important. So all right. So with the banks right now, what banks do with your money, you deposit your money with banks, they give you like, as a way of saying thank you, they pay you like 0.01%, which is nothing, right? So for starters, that's why I actually don't recommend you have a savings account. I think if you're going to save your money, you need to go to like a high yield savings account, something like Ally Bank or like Amex. They have a high yield account as well. I believe both of them, they have around like 3.5% APY. So that's something you want to have. Something that's like a high yield that you'll get more value from that. Because again, y'all know, y'all have your money in the banks. You make like, you put like $1,000 into it. They give you like 3 cents. It's like, what is this? Like, that's nothing. So again, that's the reason why you actually want to go with the high yield savings account. However, so what the bank does with your money, the bank, you give the money to the bank say thank you by giving you 0.1%. And what they do with that money, they go and they invest it with other people, right? They give people loans, and that's why they have like high interest on those loans. They do mortgages, and then majority of them, they put it into treasury bonds. So the reason why they put it into bonds is because treasury bonds are pretty much like, that's like the safest investment for a bank to do, right? They can have their money sit there and like they keep a money, like little bit of cash set aside for withdrawals. Like, so if you want to come in and withdraw like $1,000, you have the ability to go about doing so. And then from that, again, as I said, with the treasury bond, the reason why it's such a great investment for banks and why they do that is because they earn interest. Now, here's the thing. So, and I hope I'm explaining this down like simplified as well. If I'm not, just let me know. I'll break it down even more clearly. So here's the thing. So you guys already know rates were low, right? They printed out all this money. They started giving people all this free capital when rates were low. However, rates are no longer low. Rates are actually higher. So I believe the rate right now, it'll change on the 22nd. But right now, the Fed fund rate is 5 and 5.25. So anywho, speaking about that. So now, since rates are increasing, those bonds that banks are that they purchased when rates were low, they were not capped, but they actually agreed to around like 1%. Let's say for like a 10-year bond, they got like 1% yield on that, right? And yield, what that means is how much money you're getting back within that time frame. However, now when rates are increasing, banks are now giving out, or not banks, government are now giving out yields for the same exact thing, the same exact like 10-year yield. They're doing it, or 10-year bond, 10-year bond. And instead of doing it for like 1%, they're now doing it for like 5%. So in reality, if you think about that, you're pretty much fucked over because you're like, damn, I just agreed to like a 1-point yield and you're now doing like a 5-point yield. Like, how can I really compete with that? I'm losing money. And here's the thing. So as a bank, that's like their asset. And now you can probably say to yourself, like, why would they be losing money? Technically, they're not. If they just keep that yield, or not keep the yield, oh my gosh. If they just keep that bond set, they won't be losing any money. However, right, so like as a depositor, I'm going to come and take money out. If I'm going to come and take money out, the bank have no choice but to sell those assets, which is those yields. They have to sell that for a loss, right? So pretty much what that means is you purchase something at $10, you sell it for $5, that's a loss, right? So they have to sell those assets for a loss and make sure that their customers are able to have their money. Now, again, it's only amount of time how much you can sustain about doing this over and over before it's like you pretty much go bankrupt. And also, yeah, so as I was saying, so now on Thursday, this previous Thursday, I wrote it down as well. This previous Thursday, we had, I thought I wrote it down. Oh, there we go. So this previous Thursday, we had $42 billion worth of withdrawals and under $42 billion in withdrawals in under 24 hours with SVB Bank. So think about that. Like once they announced that they don't really have the capital needed to give everyone their money, and then from that happened, it became public. People are like, listen, I need to go take my money out. They took their money out, and then Friday they collapsed because obviously they don't have the capital. And now no one's going to say to themselves, hey, you know what I want to do? I want to go buy a bank that's failing. That doesn't make any sense. So the thing about it is this. Now that happened, and now like pretty much that's like the second bank failure that we had. It's really the third, but that's second largest bank failure that we had since the 2008 crisis. And then we had another bank failure yesterday as well, which makes another one. So now what's going on? And this part is important as well. The FDIC, they insure up to $250,000 of your money per depositor, right? So some people think that like if you have if you have 4 different accounts within a bank, you're going to be insured up to $250 per account. That's not true. It's per depositor per bank, right? So now let's say if I have a Chase account, if I have a Bank of America account, and I have a Capital One account. If I have $250 in each one, I'm insured. If I have more than that in that bank, I'm not insured, right? So it's like I'm risking the fact that my money can just go, like it could just disappear pretty much, like, but that's just the risk you take. And that's the reason why a lot of people, they have different bank accounts with different bankers, right? So it's like you may have a bank account with Chase, a bank account with Capital One, a big account with Amex, like a big account with Citi, and you have $250,000 within each bank. That makes sense because you're going to be insured of $250,000. However, the thing about it is this. So SVB, which is Silicon Valley Bank, that bank, they're pretty much housed to like a lot of like tech startups, a lot of businesses like Roku is with them, Etsy is with them. So a lot of these businesses there are doing business with this bank. So a lot of people from Silicon Valley, they came out, like a lot of influential people as well, like Mark Cuban came out. So those are the people who's heavy in the tech sector. They came out and said, listen, Fed, you need to make sure that not just $250,000 is of deposits are going to be insured. You need to make sure that every single dollar is going to be insured. So what that means is this. Let's say if you have $1 million within this bank, right? FDIC only insures up to $250,000. So if they're going to come out and say you need to make sure all of their money is insured, they're pretty much saying that you need to make sure FDIC or Fed that not just the $250,000, that $1 million is going to be insured by each depositor. And again, as I said, SVB, they're housed to a lot of tech startup banks who have millions of dollars of cash deposited within these banks. So when they went under, they weren't unable to do like payroll, so those type of things as well, which makes it more difficult for that bank. So that's why a lot of pressure came out towards the Fed as well as Biden. So Biden came out, and as well as the Fed, they both came out and said that, they're going to make sure that those within these banks, they're going to have all their money back, which is not smart. I'm going to break that down as well. Honestly, like at the end of the day, this is your risk. Like you just that's how business works. But I'm not going to get into that right now. But yeah, anywho, so like they came out, they came out and said that, they're going to make sure that each depositor is going to have all of their money available. It would say by Monday, which is today, or by Wednesday. However, here's the thing. Biden came out and said that he's going to make sure that all this money that's going to go towards giving everyone their bread back is not going to come from taxpayers' money. So the thing about it is this. The government actually makes money through taxation. So a lot of people say that as if like, how come the government just can't print more money and, how come the government just can't print more money and take care of like student loans and stuff? That's not really how it works, right? So an example is this. All this money that we're sending to Ukraine, where are we getting this money from? We're printing this money. So when you print money, that's going to increase inflation, right? So inflation, that right there, people call it the silent tax. The reason why, because you may not be paying it through taxation, which means higher taxes, but you are going to be paying it with higher goods. So an example, let's say if you go to the store and let's say you go to the corner store, right? And you get a bag of chips. Bag of chips are like 50 cents. You later go back to that corner store like a month later. You want to get that same bag of chips for 50 cents. It's now 75 cents, right? That right there is how inflation works. It's the silent tax that you're going to pay. So anywho, as I said, so Biden said that the taxpayers are not going to be paying for it. But again, that's cap. Like, there's no way in hell that, all right, let me not go that route. So how they're going to be paying is this. They need to print the money to go about making sure that people have all their money set with all the depositors. When they print this money, that is going to go towards inflation. So inflation is going to rise. It's just inevitable. It's going to happen. Now, I'm breaking all of that down because a lot of people are also saying that this is not the same bailout that we had in 2008, mainly because like in 2008, you had executives, you had CEOs, you had shareholders of a company. And what that means, if you own a stock of a company, they were the ones who were getting bailed out. And they're saying that, well, this is different because now you have individuals who they have deposit within that bank and they're the ones who are getting bailed out. And again, I get what they're saying about it being different. However, at the end of the day, it's not technically different. And the reason why is because you have like the CEO, the CFO, and the CMO of Silicon Valley Bank. Just 12 days ago, well, not 12 days ago, 2 weeks ago, just 2 weeks ago, they sold around like a little over $5 million, not billion, $5 million worth of stocks. And these guys have never sold any of these assets for like years. So it's like, what did you know? Like, obviously you knew something, right? And that's another thing as well. Like, when it comes to business, you're going to know things that are going on before you go to the public and let them know. So they definitely knew that the bank was going to go under. They were just making sure, like, listen, this bank about to go under. Let's make sure that we get our capital. We get this bread. Let's sell all these assets, whatever. Let's get this bread. So when it goes under, we're going to be good. That's exactly what happened. So they definitely knew that something was going on. And again, a lot of people are saying that, it's not fair because the banks can just, not the banks, but the government can print all this money and help people out, which is true. They could. However, again, as I said, it's going to be through taxation. Through inflation. So it's like, damn if you do, damn if you don't. At the end of the day, that's what's going on. Now, personally, I think that they should not be doing that. I think that, that's on you. Like, we're issuing up to $250,000 per depositor. You got more than that in the bank. Tough luck. Like, that's really what we should do. But again, we want to be to the rescue and save all these businesses. But it's not really helpful because, again, taxpayers are going to be the ones paying for this. You're going to pay for it through high inflation, and that's inevitable. And I had a debate early on Twitter. And this guy was like, how that's not true. And I'm like, fam, you don't know what you're talking about. So it's interesting because, again, as I said, you either pay taxes with taxation increasing or you pay with inflation. There's no such thing as free money. So even with 2020, right? The government, they printed all this money out on 2020. And then what happened? Inflation happened, right? So now we had the highest inflation in damn near 40 years, and they saying that inflation is dropping, but it's actually not, because we're also now seeing the effects of all that money being printed from Ukraine that we sent to them, which is wild. That we sent to them through the third and fourth quarter. We're now starting to see that, and we just sent another $400 million. So we're going to also see that go towards inflation. And now we're printing this money to make sure that people of these banks are getting bailed out. So now we're going to see that go towards inflation. So that's pretty much how I wanted to just break it down. I didn't want this live to be too long. I'll do a Q&A, if you guys want. But yeah, so pretty much in layman's terms, just want to do it for those who are just coming in right now. The reason why this is so important, is going to affect your wallet, is because inflation is going to increase because of that. Now, how inflation works is this. It's just supply and demand. If you print more money, right, you have more available. It's your demand for it is lower, right? So because of that, as you print more money, or the government, as they print more money, that raises inflation. Now, what the government is doing, they're going to make sure that every depositor who had money within these three banks that failed, they're going to give them the money back. So what that means is this. FDIC, they only issue up to $250,000 per depositor. So if someone has $1 million within the bank, and the government is going to make sure that the person has that they're not going to just get the $250,000. They're going to get the entire $1 million back. That right there is $750,000. Where is that going to come from? They have to print that money. And again, all these banks, they pretty much sold all their assets as well. So they have to print that money, make sure that all these depositors have the money available. But I get it though. You want to make sure the American people come first. I get that. However, I think it would have been best to be honest and say, listen, like, I have to raise taxes, right? We're either going to have a higher taxes or we're going to have higher inflation. Which one do you want? And no one's going to say higher taxes, but higher taxation is way better than higher inflation, right? Because with higher inflation, goods and services, everything is going to increase, right? So now let's say if like your rent is like $8. That was a bad example. Your rent is $1,000. It's now going to go up to like $1,100, right? And like say your paycheck is $1,000, and now you're making like $1,005, right? You got a little gain, but like, what is it really for you? It's really nothing for you, and because of that, like, that's the reason why as inflation is increasing and the value of your dollar is decreasing, because your paycheck is not increasing along with it. So the average increase right now of inflation right now is at 6%, 6.4%. Well, tomorrow we'll see if it went up or down, but pretty much it's at 6.4%. However, the average increase of your wages is 3.2%. So you have 3.2% of your wages, 3.2% of your wages, 6.4% inflation. It's not adding up, right? So it's like, yes, you're making more money at your job, but at what cost? Right? Inflation is actually eating all of that gains that you're making and pretty much not making anything from that. So yeah, guys. So I just want to do a quick breakdown, as I just said, going over what happened, why this is important. I want you guys to understand from like a 10-year-old point of view, or a 10-year-old breakdown of how it was going on. Because a lot of people, on social media, they're saying all these terms and people don't really get what's going on. So I say, you know what? Let me come on live and give you guys a quick breakdown of it. So if you guys got any questions, let me know. I'll break those down as well. If you guys get any questions about the markets, I'll break them down too. Another thing, if you guys want more of these type of breakdowns, join my Discord. I do this on a daily basis. I'll break down the markets. I'll let you know exactly how it's going to impact the markets as a trading aspect, as an investor aspect as well, and also what the economy current rate is. So again, if you guys have any questions, let me know. I'll scroll through the chat real quick before going back down. Spitting. I appreciate that, fam. Let me see anything else that we have. This one said, they'll flip your money 10 nights before you take it out. Yeah, 1,000%. Banks are notorious for that. They're going to give you, and again, as I said to you guys, like, I don't think you guys to have your money in bank accounts. I think, in regular savings accounts, if you're going to have your money within like high yield savings accounts. That's make the most sense, because again, traditional bank account, they give you like between 0.06 and 0.10% yield, right? Compared to like a high yield savings account, which is giving you 3%, right? So you have 0.06%, 3%, right? There's a huge difference from that. All right, one question. If CPI comes out lower than expected, what's the reaction in the market? Great question. So, like, if CPI comes out lower than expected, that means that, as of right now, CPI is expected to be 6%. So, if CPI comes out, 6.4%, sorry. 6.4? Let me double check. Let me make sure if it's 6.4 or 6%. CPI expected for tomorrow is to come out, year over year is 6%. So, if we come out anything lower than that, that's going to push the markets up. Why? Because that shows us that inflation is decreasing. And if inflation is decreasing, that means that the Fed is going to pivot sooner with raising rates, right? As of right now, we know that the Fed they're looking to raise rates 25 basis points, which is 0.25%. They're going to do that on March 22nd. They're doing it again in May and June, and then more likely they'll probably do it in September as well. I think they will. So if CPI comes out lower than expected, that means that it's lower than 6%. The markets are likely going to rise, and CPI, that'll be year over year. However, if the opposite is true, if CPI comes out at 6.1% or higher, that's not going to be good for the markets. That's going to drop the markets. Why? Because if we have high inflation, that shows that the Fed has no choice but to continue raising rates. They can't pivot. And if they're going to raise rates and they can no longer pivot, that means that rates are going to increase. And if rates increase, that means that your debt will increase. So a lot of people don't know this as well, but how it works is this. Every time the Fed raises rates, your debt increases. The reason why is because credit card debt, their APR increase, your student loan debt APR increase, mortgages APR increase. However, on the bright side, your savings account increase, right? So like high yield account, they will increase. So like, as I said, as of right now, it's 3.4% high yield. More likely that'll be like 3.5, 3.6 as of March 23rd. However, your savings account, which is like 0.06, that may increase to like 0.08%. So it's like that's really nothing that you're getting. But yeah, I hope I answered your question with that right there. And if we have any more questions, let me know, and I'll break that down too. Let me just scroll a little bit to see what else we got. That was a great question, though. A lot of people are interested in want to know exactly how in CPI will affect the markets. But that, no problem, bro. But that literally is the breakdown of that. And again, CPI comes out tomorrow, Tuesday, Eastern Standard Time, March 14th. I almost forgot what date it is today. March 14th at 8:30 a.m. Eastern Standard Time. So if you guys are living in the East Coast, that's going to be 5:30. If you guys are out behind, that's going to be 7:30, and so forth. So just be mindful of that. And if you are trading tomorrow, especially with everything going on, I highly recommend for you to lower your lot size because it's going to be extremely volatile, right? So like, let's say normally your stop loss has to be like 60 pips, right? I'm throwing numbers out there. Now your stop loss has to be like 100 pips, right? So like, it doesn't make sense for you to use your normal lot size if the volatility is increasing. If the volatility is increasing, lower your lot size, right? Aim for just like, get in the market, catch your setup, right? Be patient. And if it's too volatile, there's nothing wrong with just not trading. So just be mindful of that as well. What's up, bro? Be mindful of that as well. So if you guys got any other questions about what's going on, about the markets, how they impact your wallets, let me know. I'll wait a little bit because I know that Instagram is a little delayed when it comes to me actually speaking in real time and what Instagram shows you guys. So I'll wait a quick second to see if you guys got any questions. In the meantime, Silvergate, which was the first big I was talking about that failed last week. I think it was Monday last week. Monday or Sunday it failed. Monday or Sunday last week it failed. But that was also one of the largest crypto banks, and that was a huge reason why crypto started to tank since Tuesday. I believe it was Monday or Tuesday. Since then, because of that bank had went under. However, like if you guys are aware, Bitcoin as well as other cryptos are up, and I feel this is mainly because a lot of people are speculating that Bitcoin as well as crypto is a speculative asset. So they're speculating that these banks are no longer safe. And a lot of people are also saying this. Like if you've been paying attention, a lot of people who are like heavy on like the crypto space, they've been saying today like this is the reason why you guys are putting money in Bitcoin, blah blah and so forth. Bitcoin is more stable, blah blah. And like that's a huge reason why crypto is increasing. So people are taking their money out to put it towards Bitcoin and so forth. The thing about it is this: like at the end of the day, people don't get this. And you sell your Bitcoin for cash. You are going to sell your Bitcoin for US dollars. I don't understand why people forget that. And like people be like, well, that's not true. No, it is true. Like even if you're going to use your Bitcoin, like some exchanges, like or some individuals, business owners, they allow Bitcoin payments. However, like again, if I get paid in Bitcoin, right, and if I'm a holder, it makes sense. I'm going to hold long term. However, if I get paid in Bitcoin, I want the money right now. I have to convert that money to US dollars. People forget that. Like at the end of the day, it's still US dollars you got to convert it to until the we lose the reserve currency status, which we are on track to do so. Probably about like the next 2 years, we'll lose the reserve currency status. But yeah, people forget that at the end of the day. Like I get it, you do want to protect your money, especially the fact that like it's an asset. Like Bitcoin is an asset. People keep saying like it's not an asset. Crypto is an asset. At the end of the day, if you buy something for $10 and it goes up to $20, you made money. That's an asset. So you can't ignore that. That's exactly what an asset is. What's up, girl? But that's exactly what an asset is. So yeah. But I see you guys don't have questions, so I'm going to cut this. I appreciate you guys tuning in. I'm gonna have this on YouTube, so you guys whoever wasn't able to actually view this in real time, y'all can see this. I'm gonna DM you. I'm gonna DM you as soon as I'm done, but y'all can see exactly how these things will affect your wallet, because this right here is important. We are literally on the brink of a financial collapse. They're trying to say it's not, but it really is. And guys, like right now is the time for you to get your cash together. Right now is the time for you to learn about how you can increase your income. Right now is not the time to increase your expenses. Lower your expenses. Increase your cash flow, learn about money, learn about, learn about skill sets, right? It doesn't have to be trading. It could be whatever you feel you want it to be. Makeup, it could be hair, it could be business, not business, it could be photography. It doesn't matter what it is. Now is the time to step your game up and learn more about how you can increase your income, because we are literally on the brink of a financial collapse. and you don't want to be the person who is suffering because of this collapse and you have nothing to fall back on, right? Take this time out to learn these skill sets to increase your income. So when like, if the worst case scenario does happen, you can fall back on that skill set. And I'm telling you guys right now, skill sets, they will definitely pay you more than your job will. Thank you. I hope I will catch the recording. I was late. No worries. It'll be recorded. I'm gonna put it on YouTube, and I'm also gonna keep it on here. But again, guys, I appreciate you guys for stopping in and checking in on this live to see what's going on. And until next time, peace out.